today what we're going to be doing is looking at the UK plastic packaging tax. So my name's Lee Waring, I work at Valpak, I'm one of the strategic account managers. I'm one of the people at Valpak that is looking into these areas of what we call extended producer responsibility. So there's a raft of different packaging legislation that's going to be changing over the next few years. And what's going to happen with this, it's going to completely change the landscape when it comes to how packaging legislation works across the UK. We're going to look at where the plastic packaging tax fits into this framework and look at, say, some of what we know about the plastic packaging tax. There's a few things that are still yet to be confirmed. This is legislation that hasn't yet actually been set down in law. So we have draft legislation and we have some draft guidance, but there are still likely to be tweaks to this as we move over the next few months. But we'll take you all through that over the next half an hour. Okay, so in terms of an agenda, what we're going to be looking at. So first of all, we'll look at the background to the packaging reform initiatives, look at what to expect over the next 3 to 4 years as these different initiatives start to come in. And then we'll look at specifically why plastic has been targeted in terms of a flat tax applied by HMRC. We'll then look at the real kind of detail behind the plastic packaging tax, so look at things like the scope, any exemptions that might qualify, your company might qualify for, liability in terms of where you're going to be incurring liability and what that liability will likely cost, and then some of the detail behind the actual submission process and how you keep records and what kind of data you're going to be expected to be able to handle and present. Finally, at the end, we'll just have a quick couple of slides on what we're intending to do to help people, because obviously we're a compliance scheme. What we do is we help people comply with different bits of environmental legislation. So we're developing a service to help businesses deal with the requirements of the plastic packaging tax. Okay, so to start with, we want to try and set in stone where the plastic packaging tax actually sits into these different reform initiatives, as I mentioned. So there's 4 what we call consultations that are currently in progress, and these are the 4 different core initiatives that are going to be coming in over the next few years in either England or across the whole of the UK that are going to completely change how packaging waste legislation works in our country. As you'll see, we're going to be focused on plastic packaging tax, the one highlighted in green in the bottom right, but we'll quickly just touch on these other 3 as well because they are quite important. The idea is that most of these will work together, say the government are designing them all at the same time, so hopefully they get implemented in roughly the same period as well, and it means that they should hopefully all interlink and they should all work together seamlessly. We'll see if that happens. So the one in the top left-hand corner, we've got the reform to the packaging waste regulations. So those of you that are obligated packaging producers, I know Ruth was saying before there's a fair few sort of packaging manufacturers and merchants on the call, so I imagine that you guys are obligated under the current PRN system. Well, in 2023-2024, we're going to have a complete overhaul of the PRN system. What it's going to do is it's going to basically take all of the financial obligation when it comes to sorting, collecting, reprocessing all packaging waste in the UK. It's going to take all of that cost and it's going to give it all to the producers of packaging. This is a very wide-ranging piece of legislation. We've just recently, in the last couple of weeks, so say going back to the start of this month, we've had a release of what we call the second round of consultations on EPR. And this basically gives us more of an idea of where the government is going with this, gives us a bit of detail on who is going to be obligated. But as I say, this is a very, very wide-reaching piece of legislation. It's going to drastically change not only the costs that people are incurring under the new system, but also the way they declare and the kind of data they're going to have to be declaring as well. But again, we're not focusing massively on that today. We're here mainly to talk about the plastic packaging tax. We've also got deposit and return schemes. So again, most of you, I suspect, will have heard of this, considering the industries that you work in. But this is a system where drinks, beverages, or beverage containers and drinks containers, so anything from bottles of water to wine bottles to beer bottles, all of these containers are going to get split out of that new EPR system, and they're going to be captured under this new deposit and return scheme. The basic principle is that you're going to see a deposit charged on each container when it's sold. So it's looking as though it's going to be around about 20p per container. So if you were to go into a shop and you buy a bottle of water, then there's an extra 20p charge that's going to be on that bottle of water. It's then up to the consumer to bring that bottle back once they've consumed the drink, and they can either return it to a reverse vending machine or return it over the counter at various different return points that are going to be set up around towns and cities across the UK. When they do that, they're going to get their 20p deposit back. So what it's going to be doing is placing a financial sort of incentive on end users to start returning drinks packaging themselves. But obviously this is going to have drastic change, drastic impact on how waste management for drinks containers works across the UK. The fact it's going to be completely split out from all the other kind of packaging under that EPR system means that it's going to be very, very yes, there's going to be a lot of difficulty in making sure these two systems work seamlessly side by side. The third one is consistent collections. Again, won't dwell too much on it, but this is essentially trying to set a consistent set of materials that all local councils across England will have to collect from businesses and households. At the minute, you've got these slightly weird scenarios where one council will say that you can recycle a certain kind of plastic, whereas if you go 5 miles down the road, the next local authority will say that you can't recycle a certain kind of plastic. And this confuses people across the UK. It means that we end up with stuff getting landfilled that perhaps shouldn't be. It means that the waste stream that we get from households is difficult to sort, especially when you have commingled curbside collections. So what this is designed to do is say mandate that local authorities are going to collect a certain set of materials across the whole of the country. They'll be legally required to collect that from curbside and, as I say, from business as well, where business collections are in place. And what this will do is it will clear up the waste stream that we're getting from end users, and it should hopefully push us towards better recycling and higher recycling rates. And then we've got the one that we're focused on today. So this is the one that's going to be set to come in sooner than all the rest. So the plastic packaging tax is a reform initiative that's not being run by DEFRA's. These three that we've just spoken about here are all being run by the Department for Environment. However, this is one that's been run by HMRC. So this is a flat tax that's going to be applied on any plastic packaging that's either made in the UK or is imported into the UK that doesn't contain at least 30% recycled content. And this is set to come in April 2022. So now only, say, 12 months away. All these others are set to come in across 2023 or 2024, so a little bit further down the line. But the plastic packaging tax, this one is far more imminent because we only have a year now to prepare for its implementation. So this is the one that we're going to be focusing on today. So just to set the scene and look at why plastic packaging in particular is the material that's been targeted by HMRC for this tax. So the UK uses a lot of plastic. I imagine most of us know that just from our day-to-day lives, walking around, you can see how much plastic is actually in use. So estimates are that the UK is using around about 5 million tonnes of plastic every year, and about half of that is packaging. So a very, very big proportion of all the plastic that goes onto the market is actually used as packaging. Despite that volume of plastic going onto the market, say historically, it's been a very difficult material to actually recycle. So just under 50% of that plastic packaging we assume at the minute is being recycled. These are all based on 2019 numbers from a Recoup survey. Of that, say, 2.5 million tonne, or the about 1.25 million tonnes of that that's actually been plastic packaging has been recycled in the UK, about 39% of it has been recycled in the UK itself. So this kind of shows you how reliant we are on export markets. We still have to send a lot of our plastic packaging overseas to get it dealt with. UK plastic recycling infrastructure has been growing over the last couple of decades, say mainly because of the implementation of the PRN system, giving that financial subsidy to plastic reprocessors to set up shop in the UK and start reprocessing material in-house. However, we still only deal with 39% of our own plastic in country, and we have to export the rest of it. This means it's about 1.15 million tonnes that went to landfill energy recovery in 2019, so still a very, very high amount of plastic that ends up getting buried, going into landfill, or getting burned for energy recovery. If we look further into the stats, we know that about 39% of all plastic packaging that is used by households is actually collected for recycling. So as I said before, a lot of this comes down to what kind of plastic materials local authorities will say they collect versus those that do not collect certain materials. Obviously, we know there are certain plastics that just aren't collected anywhere in the UK. It's either too difficult to recycle or the technology just doesn't exist to recycle it. So that means there's about 560,000 tonnes of plastic packaging that gets collected from UK households each year. This only tells us half the story, though. This is the amount of plastic that's going into the market is actually getting reprocessed. Like, what does our capacity to deal with plastic actually look like? So UK MRFs, so these are MRFs, these are material recycling facilities. These are plastic and sorting and reprocessing facilities. And these are, at the minute, underutilized. Our sorting capacity is around about 1.6 to 1.9 million tonnes a year, but at the minute the figures show that we're only using about half of that actual sorting capacity. So at the minute, our own in-house facilities for sorting plastic, we're really not using them to full capacity. We then know that reprocessing capacity, so it'll go from a MRF, it will go to a reprocessor and get physically reprocessed in most instances. And we know that this is also around about half of what it can be in the UK currently. So at the minute, the economies kind of don't stack up for lots and lots of UK reprocessing. As I say, we still export the big chunk of our plastic overseas just because there's demand from overseas reprocessors, there's demand for secondary materials from places such as the Far East. So at the minute, we're kind of underusing our own in-house reprocessing. What we have seen, though, over the last couple of years in particular, is that there are certain bans and restrictions coming in. Say the Eastern world is kind of waking up to the fact that they are taking on a big issue by importing these volumes of waste plastic from the West. Say a lot of these figures, these are not unique to the UK. When you look at other European countries, Western worlds, we are exporting a significant amount of plastic across to Eastern countries. But what we have seen, say, particularly China, is probably one of the more famous ones in the last couple of years. China placed a total ban on importing plastic packaging waste a couple of years ago. And this had a very big knock-on effect on the UK waste system and also, say, European and US waste systems as well. What we've seen over the last sort of 1 to 2 years as well is that other countries, so China used to take the biggest chunk of exported plastic. However, other countries such as Malaysia, Vietnam, the Philippines, these countries took more and more plastic as China started to close its doors. But you might have seen news articles and stories on the BBC. There's been a panorama investigation on UK plastic waste turning up in dumps and landfills all around the Eastern world. So these countries are starting to wake up to the problem. They're starting to realise that they can't import these volumes of material, and that sort of illegal imports and exports are rife when we look at plastic exporting. So as more and more bans come in on shipping plastic around the world, obviously as a country, we're going to have to start to deal with more and more of this in-house. It's causing great amounts of volatility. Say, again, we're talking about the PRN market, say where the system that producers currently use for complying with the packaging waste regulations in the UK, the price of a PRN is based upon the supply and demand dynamic for that particular PRN. As we see more and more options for exporting plastic get closed off, it's going to cause more and more volatility in those PRN prices because exporters are just going to be left with no options, or they're going to have to be using the more expensive options to ship that plastic around the world and get it dealt with. So all of this combined means that we're going to have to, as a country, start to deal with plastic more in-house. And so the government is going to start looking at initiatives to try and drive demand for UK plastic reprocessing and make sure that we're not shipping our problems around the world as we have done in the last few decades. Okay, so moving on to the actual plastic packaging tax itself. So the objectives for the government when setting the plastic packaging tax, as I said before, they want to make sure they're diverting as much plastic as possible away from landfill and incineration. We want plastic to be getting properly reprocessed, say dealt with by recyclers, turned back into a recyclate and put back into the economy. So it's this circular economy that you might hear mentioned quite often. To do that, we want to stimulate greater recycling and collection of plastic waste. So to do that, the best way is to create more of a demand for recycled material. By putting in this tax on any plastic that has less than 30% recycled content, well, then you're going to drive people to go and actually try and get hold of more recycled content, use packaging that has a higher recycled content threshold, and this in turn is going to drive the demand for that recyclate and pull more material through the system. So it's going to be providing this clear economic incentive for businesses to go out there, source recycled material, source recycled plastic, maybe go and try and find suppliers that are consciously sourcing recycled material and putting it into their products. So these initial proposals got announced in early 2019. As I say, we've had updates to this as we've moved through the last couple of years. We had updated proposals in the spring 2020 budget. And at the end of last year in November, we actually had the first set of draft legislation on the plastic packaging tax. So we've had our first look at what the legislation is actually going to look like, how it's going to work. As I say, there are still a few bits that need to be tweaked, a few kind of points of technical points that need to be ironed out, but just last month we had the powers to actually establish the tax. These were contained in the 2021 financial bill, so the Chancellor announced this in his speech in Parliament back last month. Okay, so this is a timeline that's kind of showing the progress as we've moved through the last few years and kind of where we sit now with the plastic packaging tax. So as I said before, we've had all these various different proposals coming in with each budget in 2019 and 2020. November 2020 had that draft legislation, and with the current progress, we're in early 2021. So we're expecting updated draft legislation at some point in the summer, we think, this year. There's no set date when this is going to come out. But as I said before, there's lots and lots of discussions going on at the minute. Every time a proposal comes out or a piece of draft legislation comes out, there's a consultation process. You can respond to it. So the government at the minute is collating all the answers that basically they've got to the questions that were posed after this draft legislation was produced in November last year. So we're expecting updated legislation, say at some point, we think in the summer this year, and that will give us a bit more of an idea of some of the more technical points that aren't yet hashed out in the legislation, and we're hoping for a very more detailed guidance document as well. At the minute, the proposed implementation date is April 2022. As I said, this is not yet set in stone. We're pretty sure it's going to be April 2022. This piece of legislation is far more advanced than the other three bits that we were looking at from DEFRA. As I say, this has already gone through its second consultation phase. That's all been done and dealt with. So yes, we're pretty confident that HMRC are going to bring this in on time for April 2022. So as I say, it really doesn't leave us much time at all. We've got 12 months to get everything in place to deal with the implementation of this. Okay, so a bit of an overview now on what it actually means to be obligated under the plastic packaging tax and some of the things that you can expect in the future. So this tax is going to apply to all plastic packaging that is either manufactured in the UK or is imported in the UK on or after that April 2022 implementation date. What it's going to do is it's going to apply this £200 per tonne tax on any packaging that say is either manufactured or imported that has less than 30% recycled content in its makeup. We know it's going to apply on a per component level. So data is going to have to be gathered on a per component level, and that 30% is going to apply to each individual component. So if we look at, say, we've got a picture of a plastic bottle here, so we may as well use that as our example. There's probably 3 or 4 different plastic elements to this packaging. You've got the actual bottle itself, you've got the cap, you've then got potentially a label and maybe a seal potentially as well if it's a container that requires a seal in the lid. So you've got many different elements that could be plastic and could contain plastic. And all of these different elements may have different recycled content in their build. So the bottle might be 50% recycled content, therefore it would be exempt from the tax. However, the cap might have no recycled content in it, therefore you'd have to include the weight of all the caps in your tax return. So producers are going to, for a start, have to have a breakdown in their data to be able to work this out. They're going to have to know what the recycled content threshold is in each of the individual packaging components in their packaging. It's important to know that 30% cannot be averaged across multiple packaging components as well. As I say, if the bottle has got 100% recycled content and the cap has 0% recycled content, you still will have to declare those caps because, yes, the average recycled content across the bottle might be 50%, but you can't average it like that. You're going to have to do it on a component by component basis. As I said before, the £200 per tonne tax is going to get applied on any packaging component that doesn't meet that 30% recycled content. It's not going to be scalable. So if you've got 29% recycled content in the cap as an example, then you're still going to be subject to that £200 per tonne tax. So it's not going to be scaled based on how much recycled content you have. It's just a cut and dry. You need to have 30% or more recycled content to avoid that tax. We know that it's going to be quarterly declarations and payments to HMRC. So a couple of weeks ago, we got sight on the initial kind of draft of the online platform that HMRC want businesses to be using. We've got a bit more detail on that in a few slides' time. So we know that businesses are going to be expected to go onto this online platform, enter their quarterly data, so the amount of plastic they've manufactured or imported in that quarter, the amount of that plastic that is going to meet that 30% recycled content threshold, and therefore the amount that doesn't, and they are going to be liable for the tax on. Once you've done those quarterly declarations, you're then going to be starting to actually have to make those payments. So there's going to be a tax liability calculated from that quarterly submission. After you've made your quarterly declaration, it looks as though you're then going to have a month to pay that tax liability. So this is going to be starting from Q1 2022, we suspect, because it's going to follow the financial year. So the first data you're going to be declaring is kind of April, May and June 2022, and you're going to be declaring that in July 2022. So July 2022 is the main date. That's the first time that producers are going to have to actually make a declaration, calculate their liability and start paying this tax. Now, it's really important to note that this tax applies on top of a producer's current PRN costs. So this isn't So it's not taking the place of the current PRN system, and it's definitely not going to be taking the place of this future EPR and deposit return system we were talking about. Because this has been run by HMRC rather than DEFRA, because it's got a different set of objectives and it's designed to do a different thing, this tax is going to apply on top of any of the other producer compliance costs that producers are going to be subject to over the next few years. So this is really important to note. It could get, say, especially if you're importing lots of plastic packaging that doesn't meet that 30% recycled content threshold, well, you're going to be picking this up in a plastic tax declaration. You're then going to be complying for it as well through the current PRN system and, say, all the replacement systems that we mentioned at the start of this presentation. It's estimated that this tax is going to raise, say in the first year, they're estimating it's going to be about 240 million. And then that's obviously going to reduce, they hope, over the next few years, just because it's going to give this financial incentive to businesses to go and try and source recycled content. So the estimate is that less and less packaging is going to be liable under this tax as we move forward, because it's going to drive people to go and source more recycled content. Now, this is a bit of a sticking point, so this is bit annoying really. HMRC have confirmed that the revenues raised by this are not going to be ring fenced to put back into any kind of recycling initiatives. So I think that's a bit of, they've missed the mark a little bit with that. They could have used this money for good. They could have used it to actually sort of drive reprocessing, whether that's through consumer information campaigns, whether that's direct investment into plastic reprocessing infrastructure or technology. But at the minute, it looks as though this revenue is just going to go straight into the general pot. It's not going to be used to actually boost recycling. So again, this is one of the things that's been commented on quite a lot on the feedback to this, that it would be good if they actually ring fence this funding. But yeah, the minute as things stand, that's not going to be the case. I've just noticed I can't actually see when people raise their hand or send in questions. So I don't know, Kat, if you're on the call, could you maybe just interrupt me if there are questions and things coming in and just let me know, because I can't see them on my screen at the minute.
There are no questions yet, Lee, but I've got a couple of questions.
Go for it, yeah.
Yeah. Is this system going to be consistent across the devolved nations? And if it's not consistent across the devolved nations, how do you deal with packaging that's travelling across the borders?
Yeah, so luckily for the plastic tax, this is going to be consistent across the 4 devolved administrations in the UK. That's unfortunately not the case for some of the other systems as well. So consistent collections isn't going to be at the minute. That is targeted purely at England. We know that Wales does something quite similar at the minute on its own, and particularly the deposit return system. You may have seen stories Scotland are kind of forging ahead and they're doing their own thing with DRS before the rest of the UK. So the Scottish DRS is actually timetabled to come in a couple of years before the rest of the UK. Whether they hit that timeline or not remains to be seen. There's talk at the minute in the Scottish government that they're going to have to put that deadline back a little bit. But yes, for the plastic packaging tax, that is one fortunate thing. It does look as though it's going to be applied consistently across all of the UK. So yes, there's not going to have to be any specific different reporting or tax amount or anything like that across different areas of the UK.
And is it expected that this tax, the £245 million worth of tax that manufacturers are going to have to soak up, is it expected that that cost will be passed on to the user? Or is it expected by the user that the manufacturer has to soak this tax up?
So we've got a slide coming up on this in a little bit, but yeah, just to answer that, there's nothing in the regulations as they currently stand that stops the people incurring the tax from passing the tax on further down the supply chain. So yes, in particular, say for plastic importers, plastic manufacturers, this could be quite a significant tax amount. We suspect that some of those people that are taking the biggest hit in this, they're not going to be able to absorb this internally without passing that amount on. So yes, we are expecting to see an element of this getting passed down the chain, and ultimately, yes, it will probably end up getting passed on to the consumer. And
one final one for me before you move on. Is this system and this tax mirrored in Europe?
Yes, so there are very similar, because this is, again, there's a European directive that's been placed on all EU states that says they have to implement a plastic packaging tax. It's going to work a little bit differently in Europe because it's not directly on businesses in Europe, it is on the member states themselves. So the member states themselves are going to have to pay directly to the EU a plastic packaging tax based on the amount that as a state they've placed onto the market. But what will likely happen, what we're seeing happen over the next few months, is that individual states are bringing in legislation to gather that tax amount from their obligated businesses. However, it's going to work differently. The tax amount is going to be different in each country. So I think I'm trying to think. So I specialise mainly in UK stuff, but I have seen that there are, so I think France, Spain, Italy in particular have gone early on their tax requirements. So we have detail in our international department that I've seen on what those taxes are going to look like in those particular countries. But yes, it's going to be very different across each European state, just because, say, they have this overriding tax liability on the state itself, but it's up to them whether they pass the tax on to businesses or whether they incur and gather that cost some other way. But yes, in short, yes, there's going to be something like this in every European country.
Great, thank you.
No worries. Okay, so what packaging is actually going to be taxable under this new piece of legislation? So components only become taxable once they are actually finished. This is important to note. So components can go through obviously many different kind of what we call conversion stages. They can be part manufactured by one manufacturer, go to somebody else that does a further finishing job on it. So these components are only becoming taxable once they are actually finished, and it's the business that actually finishes the item when it's made in the UK that is going to be subject to the tax. So the wording within the legislation is following the last substantial modification, even if waste material remains attached. That is the point at which the components will become taxable when they're manufactured in the country. As I said before, the two tax points are going to be when they're made in the UK by what we call a converter, and also when they're imported into the UK as well. Because obviously if they're imported into the UK, well, there hasn't been any manufacturer in the UK to pick up the tax. So it's going to be on the importing entity, or rather the business that the plastic has been imported for. They are the ones that are going to be picking up the tax liability. Now, this is a change that's only been that's come up recently in the last couple of weeks. So any of you that have been kind of either on webinars in the past about plastic packaging tax, this is probably the one thing that is going to be new to you. It was previously believed that any plastic products that are designed to be used in transporting, storing, or preserving of goods by consumers, that these were going to be taxable as well, just because of the wording in the draft legislation led people to believe this. This would have meant things like rolls of cling film sold in supermarkets would have been obligated under this tax. Things like Tupperware boxes and the big plastic storage containers that you buy for sticking under your bed and things like that. All of those, as the legislation currently stands, were believed to be captured by this because they can be used for transporting and storing of goods by consumers. However, this was kind of raised as a quite an important matter to HMRC because a lot of people thought this was not what the regulations were designed to do. It's designed to tax things used as packaging, not things that are used as products by end users. So they actually released some guidance in the financial bill that was issued last month, and this confirms that yes, the intention is for the basically the wording to be changed slightly when the new piece of draft guidance comes out, and that the intention is for the tax to apply only to items that are used in the containment, protection, handling, presentation and delivery of goods at any stage in the supply chain from producer to consumer. So it means that things that are sold, so like say empty Tupperware boxes that are sold as a product to a consumer to just use in their houses, it looks as though they're no longer going to be captured by the scope of the tax. So hopefully that's a bit of good news for people. Obviously there were some people where those kind of products are their products, and they were getting a little bit nervous that this was going to basically apply a flat tax to the entirety of their product range. But looks so that's no longer going to be the case. HMRC have specifically said this is not the intention of the tax, and that they will perhaps change the wording as to the scope just to remove those kind of items and remove the confusion. Important to note as well that obviously you don't get just some components that are completely plastic and some that are completely non-plastic. You get some what we call multi-material components, and as the draft guidance currently states, multi-material components are only going to be obligated under this where the plastic is the heaviest material. So if you have, say, a metal cap that has a plastic liner in it, well, in most instances, that cap is not going to be obligated under this because the metal cap is going to be by far the heaviest component in that plastic packaging. The plastic seal in it is going to be far under the weight of the metal cap. So it's only when the plastic component is the heaviest material in a piece of packaging that piece of packaging is going to be taxable. However, you're only going to have to, say, consider the plastic element of those components. So again, going back to a cap or a lid, if you've got a metal element and a plastic element, and the plastic element is actually the heaviest element in that packaging component, then yes, you're going to have to consider it in your plastic packaging tax returns. But that 30% recycled content threshold is only going to apply to the plastic element. So you're not going to have to consider the metal element in your returns and in your tax liability. Okay, a bit of detail now on some exemptions, and looking quickly at imports and exports and look at what kind of packaging is actually going to be getting captured in these returns. So there aren't a massive amount of exemptions currently. The only two stated exemptions are for immediate medicine packaging, so that's human medicine, so say pill bottles, things like that, they're currently going to be exempt. And any unmodified cellulose-based materials are also currently proposed to be exempt. So those are the only two specific exemptions. So that means other things that other people possibly thought might have been exempt, things like packaging around medical devices, food contact packaging, containers for transporting dangerous goods. All of this is currently in scope of the tax, and therefore is going to have to meet that 30% recycled content or be subject to the £200 per tonne tax. In terms of what's obligated between imports and exports, so this is a bit of a funny one. It takes you a while to get your head around it because it goes against the logic of how the current packaging regs work. So worth bearing in mind, this is HMRC developing this piece of legislation, not DEFRA. So some of the ways they obligate packaging, the way they refer to packaging may differ just because it's two completely different government bodies working on this. So all imported tertiary stroke transport packaging is currently exempt from the plastic packaging tax. So when we talk about tertiary and transport packaging, this is stuff like shrink wrap around pallets. So if you're bringing in pallet loads of products from outside of the UK and you've got that pallet coated in shrink wrap, at the minute that shrink wrap, even though it's imported into the country, it's exempt from this plastic packaging tax. However, any imported primary and secondary packaging is subject to the tax. So again, if we go back to our example of that imported pallet of goods, the pallet wrapping is exempt. But if you've then got, I don't know, let's say water bottles, so you've got 10 water bottles in a secondary container, the water bottles themselves are the primary packaging, so the water bottles are subject to the tax. And if those water bottles are wrapped together with a secondary piece of wrapping, then that secondary piece of wrapping is taxable as well. So imported primary and secondary taxable, but the tertiary, transport, transit packaging, that is currently exempt when it's imported into the UK. Any primary and secondary packaging that is exported out of the country, so whether that is initially imported into the UK and exported, or whether it's been manufactured in the UK and then subsequently exported, because it's going outside of the UK, it will be exempt from the tax. We don't know exactly how this is going to work in the submissions because there's going to be obviously a bit of a delay sometimes between things getting imported, going into a warehouse, and then subsequently getting exported. So it's likely there's going to be an element of having to declare things and then claiming tax credits further down the line when you can prove that that piece of packaging has actually gone out of the country. But yes, as things currently stand, you're not going to be liable for paying for primary and secondary packaging that has been exported. It just remains to be seen how you evidence that and how you deal with that in your declarations.
Lee, can I ask a question?
Go for it, yeah.
Okay, so plastic bottles empty coming in obviously are taxable.
Yes.
What about plastic bottles filled?
Yes, so it's going to apply to all finished packaging, whether it's empty or whether it's filled with product. So yes, in both instances there, whether you're buying in plastic bottles that are empty to either sell as a product to yourself or to actually fill yourself and then sell as a finished good, they're going to be obligated under this. And then yes, if you're buying what we would deem a finished good, so a packaged finished good from overseas, so water bottles filled with water just ready to sell, they would also be subject to this tax. So yes, it's any finished packaging item being imported, whether it's filled or not, will be subject to it.
Right, and when you say reusable transport packaging, what do you mean by that? So I'm thinking of a reusable keg, for example, which is a transport of beer package.
Exactly. Yeah. So this is basically because obviously things like beer kegs, they're going around in circulation constantly, so they're only new once. Essentially, they get made, they go out for their first trip, and then after that they're used for years and years and years until they reach the end of their life. So the proposal is that all pre-existing reusable transport packaging, so anything that's already in use prior to that April 2022 implementation date, is exempt. That basically means if you have got lots and lots of these kegs already in circulation, come that April 2022 implementation date, you're not going to have to go and calculate what you've got in circulation already and declare it in your first declaration. You're only going to have to account for the new kegs that you either make or you import after that April 2022 date.
Right. So I'm sorry to go on about this, but it's quite important for the plastic keg guys.
Yeah.
So a plastic keg comprises a piece which can be reusable and then obviously a single-use bag. So the single-use bag will be taxable.
Yes.
But the piece that can be reused, the harder plastic which surrounds the plastic bag, that can be reused. But any that are made, any of these reusable pieces that are made after April 2022 will be taxed. Those that have been made before will not be taxed.
Correct. Yes.
Right. Okay. Thank you.
Yeah, and so that's because obviously they've been made prior to the implementation date, so it's unfair to include them in this tax. But yes, anything that is made after that April 2022 date, it's going to have to meet that 30% recycled content or pick up this £200 per tonne tax. And then interestingly, so we mentioned that exported primary and secondary packaging is going to have a tax exemption applied to it, but any new transport packaging that is made in the UK and then exported after that April 2022 deadline is not going to be relieved upon export. And this is probably the weirdest one. This is one that we queried with them because it doesn't make any sense. We don't understand why they would give a tax exemption on the primary and secondary packaging when it goes out of the UK, but why would they not apply the same exemption to the transport packaging? So this again would be things like pallet wrap. So at the minute, if you make pallet wrap or you use pallet wrap to pack a product and then it gets exported, that pallet wrap still has to be picked up in UK tax declarations, whereas the primary and secondary packaging potentially contained within that pallet wrap gets a tax exemption. So yes, that doesn't really make much sense to us, but say we queried it and they said that's the way they want it to work. So yeah, as things currently stand, that's the way it's going to get implemented. Okay, so who is actually going to be liable to pay these tax returns? So we've kind of mentioned it already, but UK manufacturers stroke converters of plastic into finished components, so the people that are actually manufacturing plastic packaging, they're going to be the first point of liability in the UK because they're the ones that have actually made the item for the first time. And also any businesses on whose behalf plastic packaging is imported. So whether that is somebody doing direct importing or whether that's somebody potentially getting a third party to import on their behalf. So these are the 2 points of liability under the tax. These are the 2 people or 2 types of businesses, I should say, that are going to have to register with HMRC and start making these declarations and paying this tax. There is an exemption for small businesses, so there's a de minimis amount of less than 10 tonnes. So if your business is manufacturing less than 10 tonnes in a year or importing less than 10 tonnes of packaging in a year, then you're not going to be expected to do these declarations or pay this tax liability. Grouped companies, so this is going to work the same way as the current packaging waste regulations work. If you're in a group of companies, so if you have a single UK parent company that links a bunch of subsidiary and sister companies together, then this 10-tonne threshold is going to apply to the group as a whole. So even if you're a little company and you're only importing 1 or 2 tonnes of plastic packaging, it could be that you still have a liability to make these declarations because you're part of a group that meets the 10-tonne threshold combined. So that's something to watch out for. Just be aware of your corporate structure, be aware of what other group businesses are doing, because you might not have the direct liability yourself as a single company, but your group might have the liability and therefore you might have to contribute something to a group declaration. We touched on this before with one of Ruth's questions, but there is nothing in the regulations that prevents these costs from being passed further down the supply chain. As I said before, this could be quite a significant tax amount on particularly packaging merchants, packaging manufacturers. If they don't hit this 30% recycled content threshold, it could be a very significant business cost to them. So we are expecting some element of this cost to start getting passed through supply chains. And yes, there's absolutely nothing that stops this getting passed all the way down to the end users. In the regulations, though, it looks as though suppliers are going to have to declare how much tax they have actually placed onto products through B2B invoices. So it's not going to be an invisible cost. You're not going to just see the cost of the packaging that you're buying increase. They're going to have to actually declare how much tax they're paying on the B2B invoices, and you're going to have to therefore be able to show your customers exactly how much cost you're paying and how much cost you are potentially passing on to them. So the liability, say, is going to be visible through the supply chain, hopefully. I said that this is an implementation date of April 2022. There is going to be an online declaration system that HMRC are going to set up. We're expecting that obligated businesses are going to be required to register on that platform in advance of April 2022. Say April 2022 is the date that this actually goes live, but we're going to expect, or we expect businesses to be obligated to actually have to register probably either January, February 2022, just to basically make themselves known to HMRC, familiarise themselves with the system they're going to be using for the tax declarations. And again, don't know if this affects anybody here, but any non-UK taxpayers, you're going to have to appoint a UK resident as your tax representative to have to pay this tax. Okay, just quickly a little bit on recycled content. So important thing to note that both pre and post consumer waste can be used as recycled content. So right back at the start of the draft of this coming in 2019, the idea was that it was only post consumer waste that could be used as recycled content, but that's changed. You can now use pre-consumer waste as recycled content. That is waste that is generated basically during a manufacturing process. However, that pre-consumer waste has to have gone through a reprocessing facility before it can be put back into a process and actually counted as valid recycled content. It's still to be announced if that reprocessing facility can be on the same site as the manufacturing facility, but it's already noted in the guidance that we got last month that any plastic scrap that's recovered from the same process, it cannot be reused back into that same process until it's gone through a reprocessing facility. We believe this is to discourage deliberately wasteful manufacturing processes. So I did one of these webinars a few months ago and somebody proposed that they could just have 100% wastage off their initial production, turn it around, put it back through their production line, and they could claim 100% recycled content. So this rule is in place to stop deliberately wasteful manufacturing processes and to basically stop people playing the system and doing that. But yes, pre and post consumer waste can be used to generate recycled content. You just got to be careful where that pre-consumer waste has come from and make sure that it has actually gone through a proper reprocessing facility before it's put back into a manufacturing process. We're not 100% sure yet how these recycled content calculations are going to work. As far as we can tell, the only real way of doing it is going to be a mass balance approach. So basically looking at the proportion of recycled plastic input into a process versus the total amount of plastic input, and then essentially the proportion of the recycled plastic gives you your recycled content. Again, HMRC still have to detail exactly how the submissions are going to work, exactly how people are expected to evidence recycled content. But yeah, we suspect that's going to be the way that recycled content calculations, the percentage of recycled content used in packaging, that's the calculation that they're likely to use.
Lee?
Yes.
Who's going to audit the evidence of
Good
recycled
question.
content?
So at the minute, we've asked a few of the big auditing houses, we've asked KPMG, Grant Thornton, and people like this, if they've had any guidance from HMRC on how this will be audited. They haven't as of yet. They also haven't had any guidance from any of their professional bodies on how this is going to work or how it's going to say what level of audit is going to be required to be proved to be compliant under this. So yes, the actual audit process, we don't yet know much about. So there's wording in the legislation about companies doing due diligence on their supply chains. As we'll see on this slide, you need to hold evidence of your recycled content, but exactly what evidence you actually need to hold and how far back in the supply chain you need that evidence to go, we don't yet know. We don't yet know who is going to be auditing this, whether it's going to be HMRC themselves, whether say they're going to appoint third parties to go and do these audits. What we anticipate is the most likely thing is that these kind of audits will be built into your normal financial audits. So if you have an EY, a KPMG, a PricewaterhouseCoopers already doing your financial audits, we suspect that they will be allowed to build this into their audit process, but that's not yet confirmed. So yes, watch this space when it comes to how the audit process is going to work in the future.
Thank you.
So moving on to how we evidence recycled content. So important thing to note is that plastic is going to be assumed to not have recycled content in it unless you can prove otherwise. So this burden of proof is definitely going to sit with the liable business. So if you're the manufacturer or you're the importer of that plastic packaging, it's up to you to be able to prove that it has that 30% or more recycled content. If you can't prove it, then you're going to have to take the tax liability and you have to pay the tax amount on it. So you're going to need valid documentation. And again, we don't know exactly yet what this valid documentation is going to look like. The government have released, say, this quick wording that we've got here below. So they've said examples could be evidence documents including production certificates, contracts, production certificates, purchase orders, and sales invoices. But we haven't got a definitive list as to what is and isn't acceptable. There's obviously many different kind of accreditations and certifications that people have got, different bits of evidence that you could get from overseas suppliers. However, we don't know exactly yet what is going to be accepted. What I can say is that when we looked at their draft submission platform, there wasn't any function on it for uploading evidence documents as of yet, and we don't see how they would be able to do that en masse at the scale that we think this is going to apply at. So what we suspect will happen is that you'll be required to declare the amount you've imported and manufactured, declare the amount that you're liable to pay the tax on, probably tick a declaration somewhere that says you can back up this recycled content amount with evidence. And then when it comes to the actual physical audits, that's when these evidence documents will be checked. As far as we can see, businesses are not expected to have to quarterly upload these evidence documents onto this online platform. That could change over the next 12 months, but say the sheer amount of documents that are going to be flying around, because you're going to need documents to component level as well, because this tax has been applied at component level. So you're going to need a production specification for the cap and the label and the bottle when we look at that water bottle. So yes, if they were to expect companies to upload this documentation every time they did a declaration, I think they'd be drowned in many gigabytes worth of uploaded data per company every quarter. So we just don't think that's feasible. But yes, you're going to be expected, once we know what the valid evidence is going to be, you're going to be expected to gather this evidence, store it, and then whatever audit process gets implemented, you're going to have to be able to show this recycled evidence to the auditor. And yeah, I mentioned it before, but any taxable businesses, it's going to be on your head essentially to make sure you carry out due diligence of your supply chain. All of the liability is going to sit with the liable business. It's going to be up to you to make sure if you are deducting plastic from your return, i.e. you're saying it has 30% or more recycled content, it's going to be up to you to be able to evidence that if somebody comes to you and audits you. Okay, getting towards the end of the presentation now. So in terms of what we think is going to be getting included in the reporting, so as I said, it's going to be quarterly submissions to HMRC. From what we've seen of their online submission platform, businesses are going to have to be able to declare the total tonnage of liable packaging that's either been manufactured in the UK or imported into the UK. So you're going to have to declare your total amount. And then of that total amount, you're going to have to declare how much is actually subject to the tax. So you're going to deduct the amount that is going to have 30% or more recycled content. The system then does a calculation to just basically say, okay, your liable packaging multiplied by £200 per tonne. This gives you your tax liability. They're very simple submissions from what we can see. As I say, there's just only 2 or 3 bits of data that they're expecting you to enter currently. That may change, as I say, because we've only seen the initial draft of the submission platform. But as things stand, it's not like the current packaging submissions where there's multiple tables and multiple bits you have to declare. They look as though they're going to be quite basic declarations. It's just the actual data gathering to get to those numbers, because it's at a per component basis. That could be the more onerous bit on businesses. The submissions are going to be made using a government gateway login. So every business, you'll have your own government gateway login. You'll be submitting it through this specially designed HMRC submission tool. As I say, we've seen the draft of it. I suspect it's going to have a few revisions over the next few months, but we suspect that the basic format of it won't change too much. And I mentioned it before, but it's expected that businesses are going to have to actually register on this online platform prior to that April 2022 implementation date. So if they get this live and ready to go in January 2022, then yes, expect some kind of mass mailing that goes out to all businesses in the UK, prompting them to get onto this platform and get registered, ready to start making the declarations. In terms of the records they're expecting people to maintain, so again, this comes back to the auditability of this. They're expecting people to actually have the weight of the liable packaging material they either manufacture or import, the proportion of the recycled plastic within that total, if the packaging meets any exemption, how it meets any exemptions. As we mentioned before, there's only 2 listed exemptions currently. That is the human medicine packaging and any cellulose-based packaging as well. And they also needed to be keeping a record of the date the packaging was manufactured or imported, the date it was exported or no longer intended for export. So this is just to help with those declarations, making sure you're picking up the right liability in each quarter. Say the point of liability is when it gets manufactured, when it gets imported. The points for any sort of tax return is when it gets exported outside of the UK for the primary and secondary packaging. So all these dates are going to be important to have in your online data or your data gathering. Just finally on this bit, we've just got a timeline. Again, we've already looked at a timeline of what's happening, but just a timeline of actions as well. As I said, we've got this year, so across 2021, this is where we would encourage businesses. This is the time that you've got to start looking at this and making sure you're prepared for next year. So liable parties, this is the time you've got to actually go and obtain evidence documents, start speaking to your suppliers, see what kind of evidence that they have to prove recycled content. If any of your suppliers are using recycled content, now is the time to talk to them, see if they can boost the amount to 30% plus, so you can make that packaging exempt from this tax. If your suppliers are not using recycled content, well, now is the time maybe to start going and having conversations with them and maybe other suppliers. So there will be some suppliers that seize on this and actually start pushing recycled contents and products that contain recycled content, and they'll start pushing that onto the market because they know that their customers will not be liable for the tax on it. So now is the time to start doing this. Say, start getting out there, talking to people and making sure that you're ready for when April 2022 rolls around. As mentioned on the last slide, from January 2022, this is the point at which we think liable businesses are going to get contacted by HMRC, and they're going to be expected to actually come onto this platform, register themselves and get ready for making these declarations. The legislation then goes live in April, and as I say, we're expecting these first declarations to start getting made from the end of June onwards. So that's roughly how we expect the timeline to go over the next 12 months.
Got a question, Lee.
Go for it.
Do you think that this might drive an increase in the production of eligible exempted tertiary packaging manufactured before April? You've got this April 22 deadline where if you've manufactured it before, you're exempt, and if you manufacture afterwards, you're not. Do you think that's going to drive an increase in production to get round that?
I suspect so. Yeah. If people are aware of this, then yes, especially say that point, like you say, if you make something that's sub 30% recycled content before this implementation date, then you're not going to pick up the tax on it, but it will be in circulate, like the bit going back to the plastic beer kegs. That beer keg could then be in circulation for years and years and years, but it's not going to pick up the tax because it was made prior to April 2022. So yes, that is, if it's a component or a packaging item that you're going to struggle to get recycled content into, then yes, it might be smart to maybe push through as much production as you can before this implementation date, build a bit of a stock, because yes, if it's entered circulation before that date, you're not going to be liable for the tax on it.
Yeah, and you've just made me think of another question, sorry. A stainless steel beer keg is obviously very heavy. Mm-hmm. The keg cap, the plastic cap they put on, which markets the brand, so it's got a little brand logo of Carling or whatever, is not heavy. Mm-hmm. That plastic cap may or may not be recycled plastic, but it's not the heaviest it's not the heaviest component. Do they have to declare the plastic in that?
So because the cap, when we say components are sort of hand separable individual components in a complete packaging unit. So I would class those caps as a separate packaging component to the keg. So I think those caps would be liable under this separately from the keg, just because it's easy to take the cap off and have it separate. So yes, in that instance, yes, obviously the main keg isn't going to be because it's metal, but yes, the plastic cap, because it's a separate component, I suspect that will be subject to this.
Thank you.
Okay, that's brought us to the end of the technical bit. Just a couple of slides now on basically what we're setting up at the minute, how we're intending to help people. So we don't yet know, as things stand, if we can act in the same way that we do under current packaging legislation. At the minute, we can gather data for people, we can do the declarations, we can do all of the work for a producer with the Environment Agency. At the minute, it looks as though we'd not be able to actually make declarations or plastic tax declarations on people's behalf. But we are anticipating we'll still be able to help when it comes to the data gathering element. So as far as we can see, there's like 4 steps to how a business approaches this. The first step is you've got to actually determine recycled content. So you've actually got to get out there, gather the data on how much plastic you're either manufacturing or importing, determining how much of that you're going to be liable to pay the tax on. You've then got to obtain the evidence. So any packaging that you know is 30% or more recycled content, if you want to be able to claim the tax exemption on that, you're going to have to be able to prove it through evidence. So then you've got to be able to gather that evidence in from your suppliers. You've got to then compile your return. So again, these are going to be quarterly declarations. So these are going to come around pretty quick every year. And you're going to have essentially a month. So you've got a month from when the financial year ends to get out there, speak to your suppliers, look at your import data, your sales data, whatever it is you're using to gather this information, and compile the return that's going to HMRC. And then once you've done all of this, then the fourth step as we see it is obviously businesses are going to want to try and reduce the impact of this tax. We saw before how HMRC are predicting that the tax amount they raise over the next few years is going to reduce each year, and that's because the assumption is that businesses are going to try and source more and more recycled content in their packaging, just to try and mitigate the financial impact of this. So this is kind of our four-step process. We're currently building a service around these four steps to basically help people gather the data they need, gather the evidence they need, gather all the data into a return. Even if we can't make the return, then we'll be able to actually produce that for people and give it to them to then put on the HMRC platform. And then we propose that we'll be helping people look at their options, looking at their packaging portfolios, helping them really assess and reduce the impact that this tax is going to be having on their business over the coming years. Final slide, just how we're proposing to do all that. So we have our Valpak Data Insights department. So this is our data management department, essentially. It's been doing submissions for over 250 producers under the current packaging regs for over 16 years now. We've just launched a new product data hub, we like to call it. It's an online platform where suppliers basically enter all their details. So this is how we're going to be gathering all this recycled content data for our members. People are going to be able to, say, log into this product data hub as a supplier. We're going to request all the required information from them. It's going to be an online live tool for gathering things like packaging weights, dimensions, recycled contents. And from this data hub, we're then going to be able to build the data that we need for these declarations on behalf of our members. So this is what we're building at the minute. Say the product data went live last month, and then we're going to build our plastic tax service around this piece of software essentially. And yeah, hopefully by the beginning of next year, we'll be in a position to actually start producing the data submissions that people need for these tax declarations. Okay, and that is it from me. So thank you. Appreciate that's probably a lot of information, especially if this is the first time people are hearing about plastic tax. This has kind of been a bit of a whistle-stop tour. But has anybody got any final questions before we bring the session to a close?
Yes, we do have a question.
Okay.
Just trying to see who the question is from. IK.
It's Ian.
Hi, Ian. Yes, go ahead.
Yeah, so if I'm a brewer and I'm exporting one-trip kegs full of my beer, if I'm assuming the system would work, I would get an invoice from my one-trip keg supplier that basically outlined that the plastic tax had been paid on it because of the weights or whatever. If I then export the keg, does it not work like a VAT? So I can't, there's no chain to claim that fund back. If you know what I mean.
This is the thing. We're not sure how, because this is essentially what we call a third-party export, because you've not been liable for the tax, your supplier has been, but then you're the one that's done the exporting. So in theory, if your supplier has paid the plastic tax on that keg, then they could claim a tax exemption on it, but you're the one that has the evidence for it. So yes, this is difficult. We don't know how it's going to work yet. And again, it's one of the things that we've raised to HMRC, how this sort of chain of evidence is going to work, because in theory that keg has gone outside of the UK, so you could claim a tax exemption because it's not you that's paid the tax. You might have paid some element of increased cost by your supplier putting that cost onto the cost of the product, but then how you work that back through the chain, we don't yet know how that's going to work. So yes, third-party exports are a bit of a grey area at the minute.
Cool, thank you.